Hello, everybody. It is great to be here one more time today. And my name is Gary Fowler, and I'm the CEO, president, and founder of GSD, Get You Done Venture Studios, a premier AI and quantum venture studio located in Silicon Valley. I'm a 17-time serial entrepreneur with several unicorns under the belt. I was on the original management team of Click Software, which was sold to Salesforce for $1.35 billion. Also, Eva.ai, an AI HR tech company that I co-founded with Dr. David Yang. At GSD, we believe that intellectual capacity is evenly spread around the world, but opportunities are not. And today on Runday Presents, Runday I am the chairman of, and Runday is a AI company that's using incredible technology, generative AI, to be able to help us optimize business process, everything from scheduling to understanding that relationship with a customer. With that, I have my incredible guest, Jason Jacobsohn. Jason is a master connector who is truly an advocate for the entrepreneur. He's proactive. He believes that we need to have relationships in order to be able to drive our life. And of course, we call that relationship asset management. He uses both his online presence and his extensive network, whether it's business networking and advising, strategic planning, business development, mentoring, etc., to be able to drive his business. So with that, I'd like to bring Jason on board. Hi, Jason. How are you today?
Great. Thank you for having me, Gary.
Yeah. So today, we're going to be talking about the importance of building relationships for capital raising, and this whole idea of being a connector. How does it work, by the way? How important is it, especially in a place like Chicago? I think you guys are all one big family out there. How does it work?
Yeah, big city, but very easy to find people. So my entire career and really started in my college days. So I'm going back 30 years or so. I've always been big into building relationships. And it's just, getting to know people, seeing them on a regular basis, helping them where you can. And it's really been super powerful to support entrepreneurs. That's really the area I was driven to. A lot of entrepreneurs are looking to raise capital. That is usually one of the main reasons they want to talk to you, but there's so many other needs that they have. And so I started to find myself being able to connect entrepreneurs to other people that I've met that could be super helpful. So one thing's led to the other, and it's really driven my career to what I'm doing today. And this was even before LinkedIn was a thing. And, it was mostly email communication, some newsletters, but very much in-person engagement. Still very much believe in that. We are living in a hybrid world. A lot more virtual activity happens so people can connect on a regular basis. But I'm still a big believer in in-person events. And so I've done a lot of in-person events in the Chicago area to bring entrepreneurs and investors together. So you seeing the whites of people's eyes, seeing people in person is a different experience than seeing them online.
So how do you go about it? What's going on in Chicago these days? How's the economy out there?
Well, economy is doing well. I mean, there's always challenges. I mean, everyone all over is having some challenges, right? But I would say in the startup ecosystem, things are going well. We've had more entrepreneurs than ever. We have a lot more capital than ever, a lot more support programs as well, whether it's homegrown or ones from other markets that have come into Chicago. We have so many resources. We had the tech boom, 25 years ago or so. We had a lot of things that were happening, a lot shut down. We have a very well-established ecosystem here now, and there's a lot of great opportunities for people. So I'm excited about what's happening. Every week there's new things, new funds raised, new programs launched, new companies that obviously raise capital. So there's a lot of great things happening in Chicago, and people are taking notice from around the country, if not around the world.
So when, there's a lot going on out in Chicago, what kind of companies do you see out there? You have these events, you have these networking events. What kind of companies are you seeing now? What vertical markets, what kind of companies are hot?
Yeah, so Chicago's a pretty diverse economy. So that's one thing that is good and maybe makes it challenging to get the recognition that we probably deserve more than we get. But we do have a couple of verticals that really position us quite well. I'd say one of the biggest, if not the biggest, is the transportation logistics vertical. We are the largest transportation hub in the country. Elk Grove Village is near O'Hare. as you can imagine, O'Hare is one of the busiest airports, as you know, in the world. And so we have a lot of trucking companies, logistic companies. So we have a lot of logistics tech in Chicago. We have several unicorn companies in Chicago. So that's a big one. We also have a very big food mecca. Chicago's got all kinds of stuff. We have a lot of food innovation, not only restaurants, physical food, but food tech. So we have a lot of that happening. And actually the former CEO of McDonald's, Don Thompson, the Cleveland Avenue, which is also based focused on food related businesses. And so we have a lot of funds actually focused on food, believe it or not. And so those are two big areas for sure that we have. Supply chain is also pretty big, and a lot of that, some of that's related to transportation logistics. But well, we're a B2B town, but we have a few different verticals that are pretty big, which those two are some of the bigger ones.
So you're going down through it, and what kind of words of wisdom would you give to startups out there in terms of developing those relationships with folks, and how do they go about it? What are the steps to take to start to develop their own ecosystem to be able to help their businesses?
So we are a pretty open community. I mean, you obviously still have to get introductions, but we have events like a lot of big communities or cities almost every day. So start going to some of the events, connect with the leaders of those events. A lot of the organizations run those events, like World Business Chicago does a few different Chicago Venture Summits throughout the year, and those are vertical focused. Sometimes they do a large one. Attend those events, attend some of the startup events. I mean, there are things happening all the time. I host events throughout the year called Founder Night Out. We bring entrepreneurs and investors together and other community supporters. So reach out to the leaders of some of these groups. People are pretty approachable, and set up a call, set up a meeting, and then you can get introductions from there. But go to some of the pitch events. We have a lot of pitch events, and you have to do a little research to find things. But once you find a couple connectors, then you'll start to get acclimated into the community. But again, people are pretty approachable. We want the community to continue to grow for the entrepreneur and the investor. So reach out to myself, reach out to other people. I am very open to talking to people and helping where I can. So that's, as we go back to the beginning of this conversation, relationships. I am a big relationship builder, as Gary mentioned, and I connect people. I help where I can. I very rarely leave a conversation with someone where I'm not offering to help in some way, whether it's a connection or a resource. So I always try to pay it forward and leave something with someone.
And what kind of successes have they had because of those relationships? What have you seen?
Yeah, I don't always hear about it, but if those things happen, it's always nice to let the person know. But I know sometimes there's multiple connections that happen after that. But I would say some of it is capital raise. Some companies successfully raise capital. Some form partnerships. Maybe they found customers. I did find out about one, which was interesting, that I introduced two people at an event and they got married.
Well, there you go. That's good. Were you the best man?
No, I didn't even know about it till they were engaged. Actually, I didn't know they started dating, but I was not invited to a wedding. That's okay. It was a destination wedding. I think they were thinking about it, but they had their numbers. So, but that was a fun story to hear about. I had no idea.
That's a real love connection.
Yeah, exactly.
Wow, that's amazing. And so, how long have you been doing this, Jason? How long have you been involved in building the ecosystem in Chicago?
For more than 20 years. So I moved to Chicago in 98 after college, and I actually started building relationships in college. But then when I got involved, this was right on the tech boom, 99, 2000. That's when I started getting involved. So it's been almost 24 years at this point. So I've seen a lot, and I've been on the ground floor supporting the ecosystem this entire time. And it's led personally to opportunities for myself as well in my career. So relationships are critical. Most jobs that people find are through that hidden network. It's not through job posting, it's through building relationships. And so, when I was working for people, it's helped with jobs. And now that I'm on my own, it's helped with opportunities and to meet people that can help grow with what we're building.
No, that's right. The thing is, you got to have those networks, that trusted network that people believe in you. It's almost like your personal insurance to be able to help, and they also need to know that you're willing to help them, right? In whatever way you can. How can you share ideas and time? I know dealing with these family offices that we deal with, the family offices, they have a titanium door to get in. But once you're inside, as long as you're a good person, right, the world opens up to you because they control, 98% of the wealth, right?
Yeah, and your network is your greatest personal asset. That goes with you everywhere. That no one can take that away from you, and that's something that in certain roles, if you're in sales, business development, fundraising, or whatever, that network is critical. So that's been a big part of my career, and it's really who I am at this point. Relationships are everything for me, so it drives everything that I do.
So how did you go down through, and why did you go to the National Association of Realtors, by the way? Because you're a business analyst. Did you say, oh, I want to try real estate for a change? I've done some techie stuff. I want to change my deal.
Yeah, actually, the start of my career was in real estate. I got my real estate and finance degree at University of Wisconsin. So then I moved to Chicago and I started my career in real estate. And I was a business financial analyst, help look at purchases, sales of property. And that's where I started. But this was right around the tech boom time. I got tired of sitting behind a screen crunching numbers. I wanted to continue building relationships. And I was doing that on the side, but I had a couple jobs in real estate. Then I finally made the switch into a company called V Capital, which was an early matchmaker between entrepreneurs and investors. That ended sooner than I wanted. But then I went briefly back to real estate, which was National Association of Realtors. But it brought all my things together. It brought some of the real estate know-how and understanding how to evaluate tech businesses. Because my role there was to analyze and understand what software solutions are out there for the commercial realtor. So I was keeping track of that. And so it kind of brought all that together. But that was my last official capacity in the real estate industry, but it merged things together. So that was a unique opportunity at the time. And, I created this technology map of the commercial real estate universe. It was actually a physical map that we printed out. I don't even know how many companies are left in that map or how many merged, but there's so many more now than there were back then, but it was an interesting project.
Oh, that's amazing. And, how was it like going from working with the National Association of Realtors to being your own entrepreneur? What was that like? What was that journey like?
Yeah, I mean, I did a lot of smaller projects along the way, but, I think just you have to hold yourself to a higher accountability. You have to, revenue doesn't come in. You don't have a consistent income, right? You're up and down, and you just have to be able to bootstrap your life a little bit. And, and having a spouse that works and brings in income definitely helps if you have that, but not everyone has that situation, but you still have to try to bring in some income. And so sometimes people take side gigs or part-time work to make ends meet, and that's perfectly fine. I mean, it's normal part of survival, but working with entrepreneurs in all these different areas that I've been involved in, making the leap myself at some point was necessary, and put yourself in their shoes as well.
How about the Greater Chicago Networking Extravaganza? That sounds like it was fun. What was that? You put that together. What was that all about?
Yeah, I connected with a person who is pretty renowned in the area, who had written books on networking, and we had built a good relationship. She actually had started doing this, and then I took it over with her a few years in, and we did it for several years. It was all about relationship building. It was a fancy event. We had a panel of people that were good at building relationships. We asked questions about that. And then we had table interaction where people got to meet each other. And the goal was to come away with a bunch of relationships. It was singular focus on relationship building. And we had a good run for several years, and I enjoyed it. But, sometimes it's hard to keep things going when you get too busy. And this was even before LinkedIn was a big deal. I mean, it's become bigger and bigger. In fact, with LinkedIn, I was the first 8,000 users of LinkedIn. And, it took a long time for them to get to, 500, 600 million users, but I saw the value in that right away. And now that's, to me,
I hope you invested in it.
No, I didn't. I wish I did. I didn't have a chance. My brother actually had a chance to. He's in Silicon Valley. He had a chance to get involved in that early on. When you're in that market, you get those access points. So,
no, you're right about that. So you did that, and then and that must have been pretty valuable for you too, as a networker. being basically having the organization, you probably had everybody coming up to you.
We had a lot of people, and it gives you a seat at the table. When you organize your own events or run groups, and you know this, Gary, more than anyone, you have a seat at the table and people respond to you. They may not respond to you, but you have something to offer and something interesting that, people want to be around you and the people that you associate yourself with.
No, I agree. You're right about that. They want to be associated with you, but they have the fear of missing out. They want to be involved in stuff because they want to make money, right? We have people coming to GSD right now, and Runday. It's they're associated and they see the opportunity. It's like, and then you get the herding mentality. Once one comes, then three come. Once three comes, then 12. It's unbelievable, actually. And it's kind of interesting today. How has it changed, Jason, since the beginning of the pandemic to today? How have things changed in terms of way startups raise money? Is it the same, or is it changed, or what is it from your perspective?
Yeah, it's a hybrid world. You do not have to have your first engagement or interaction in person anymore. That's a waste of time and money for many people. No reason to do it. So you can do a filter like our conversation right now, and I welcome that. So my last fund I was a part of, this was before the pandemic. We hardly met the entrepreneurs or the investors in person. We had phone call. We used Zoom, but we didn't use the video. This was like 2017. Wow. We had investor committee meetings, didn't even use the video. I think the only people that ever turned video on was the entrepreneurs because they were, I guess, used to that. But the fact is, there's so many more opportunities virtually for entrepreneurs to meet investors. Still a relationship building process. You still want to get a good referral and introduction, but there's a lot of pitch events. There's entrepreneur events where you can meet people. The metaverse thing it's kind of slowed down in terms of engagement to meet people. We were doing a lot of metaverse events, virtual events during the pandemic. You don't see as many of those. It's more just kind of these conversations now, but there's a lot of opportunities to connect with people outside of your market. But I still believe in-person engagement is critical if you can do it. We've made investments in companies that we haven't not even met the CEOs in person. And one of them happens to be in Chicago, believe it or not. I've not met the CEO.
Wow, that's amazing. You didn't even meet this. You didn't go out for a piece of that thick crust pizza.
Well,
by the way, Jason, why is that pizza so good? I don't know if you like pizza, but why is the Chicago pizza at a different level?
Yeah, I like thin crust better, but I do like some of the deep dish. It's just a deep dish is like it's a meal unto itself. You could have one slice and you're full.
Exactly.
Yeah. So it's unique, I guess, to the area, but yeah, I still meet people in person when I can, but we're all so busy. It's really hard to do that. I remember when, I told you I was early adopter of LinkedIn, and every person that reaches out to me, and I'd like to have a conversation before I connect with them because you build a relationship. That's how I've met investors, entrepreneurs, a lot of great people and part of my network. But early on in my career, I would tell people before we connect, let's meet for lunch or coffee. I cannot imagine doing that now, but I was in the city, I was single, and it was easy to do, but there's no way I could ever do that now because I get daily requests to connect. You can't keep up with that. And it was mostly local at the time. It was Chicago area, but it's totally different now. But I do believe going to in-person events is important. I'm more selective now with the events that I go to. Either I'm hosting the event or someone invites me to an event that I think is unique and different. And we have a lot of great venues in Chicago, especially the West Loop area, hot area of the city. There's a lot of unique venues with great city views, outdoor balconies, whatever. And so I'm very selective, and I mostly focus on events that I know there are going to be other investors there for sure, and then of course entrepreneurs. But I don't go to general business events as much as I used to. So it's just more as you get older, you're more selective.
I think a lot of it's social too, on one side, and you get a little bit older. I think you have a couple kids, right?
I do, yeah. College age and a junior in high school, so they don't even need me anymore, really, other than financial means, I guess.
Yeah, I mean, the thing is, what happens when you start having kids, it's hard to get out. And
you're absolutely right. Yeah,
you can't really meet with them because you got soccer practice, or you got this, or you got that, or taekwondo, or kumon, or something else. There's always something going on where you got to stretch. But you're right about it. I mean, you got to go out. The relationships are critically important. In fact, we were talking. So I was meeting with one of the family houses yesterday, and we had a conversation, or the day before. And she said that, storytelling is incredibly important, right? It's 90% of building a billion-dollar company.
Mm-hmm.
The other situation is the relationships, right? Do people trust you, and are you credible? Are you going to willing to put your money into this person so that, I remember one company I met, they raised $250,000 and they went out, the guy bought a brand new, leased a BMW, right? And I'm like, how in the world? I can't even imagine how you would go back to your investors and tell them you leased a BMW. You know what I mean? It's unbelievable to me.
Yeah, I've heard it. Yeah, it's crazy. I heard of one story, and I won't name who, but raised some money and then told the investors he's going to move out of his market and travel, like be a nomad, after he raised all that money. The CEO of the company, and so that was concerning for some. The CEO didn't end up doing that, but that had to have a conversation with the investors about not doing that.
Yeah, that's wild.
Yeah.
That is really wild. Now I hear about those stories too. And a lot of the times it's because people just don't understand that money's not yours. That money's to help build. So you get a portion of it, of course, at some point in time for building. But in reality, it's your investors trust you and care about you. And it's a really small community. If they start to talk negative things about you, nothing good's going to happen.
Yeah. And I think it was more just, it could hurt the focus, right? I don't think the entrepreneur is going to put the investor money personal use. It was more of the focus. If you're traveling all over looking for a place to live, you have a hard time focusing and sitting down building the business. I think that was more of the issue. But you're right. It could be an entrepreneur, and we hear stories of taking money and using it for personal use. When you hear stories of investors suing the entrepreneur, that's a bad thing. If that happens, game over.
That's really bad. Yeah, you're right. That's really bad. And these things come out, and rarely do I hear it anymore because there's a lot of controls out there, and it's somebody comes in a brand new BMW that's been bootstrapped. I'm going to be asking her a lot of questions. Let me tell you.
Absolutely.
Oh, that's a nice car. Where'd you get that M5? M6 or whatever it is. No kidding. I bet that costs a lot of money. Interesting.
Exactly.
So you're going down through it, and how have you seen the evolution? So if you look at right after the pandemic to today, Jason, how is the market today? Is it strong? Is it weak? Like, are people investing or not? What's going on, and how is it in Chicago? And does that reflective of the rest of the U.S.?
Well, we all know the market's gone up and down from one thing or the other, and usually there's like two things at least happening, and this is worldwide. It's obviously a global market, and it impacts everyone. One thing about innovation and entrepreneurship, it doesn't time with the market. I mean, people build things no matter when. And a lot of times people actually build companies around down markets. That's sometimes the best times. Like famous companies, Google, Facebook, started building companies during down markets. Entrepreneurs aren't going to wait for that. So that's happening no matter what. And things have exploded, especially with AI, right? And other technologies, things have exploded, and there's more capital than ever out there. But the challenge is with some of that being deployed, especially some of these larger funds, they're trying to keep their existing companies afloat, because we definitely have had down market where companies have had to lay people off. They accelerated their hiring in 2020, middle to the end of the year. In 2021, everyone exploded. 2021 was a great year for, I think, most people. Companies are laying a lot of people off, and some of the investors are keeping their companies afloat. There's still plenty of capital out there, and there's still a lot of new companies getting investment. But, I hear from the entrepreneur side as well, is they're having a hard time raising capital for those reasons, that the VCs are keeping money, keeping their dry powder for the existing portfolio. But I'll tell you, still the innovative company, the good companies, good entrepreneurs are still going to find capital. It's still available. Even if you have to go outside your market, capital is still available. We have a lot more capital sources available in the Chicago area than we've ever had. It's still not enough. That's one reason why we launched Propellant Ventures, to provide another opportunity for entrepreneurs. But we still don't have enough. I mean, you look out Silicon Valley, New York, Boston, we're still a fraction of what the investment pool. But coincidentally, or I don't know if it's ironic, but it's a good thing, we have some of the highest investor returns out of any region, the Midwest in the country, and the city of Chicago has had some of the highest investor returns. Now we have less deal flow and less capital raised, but our companies raise a little bit amount of money. They bootstrap, they don't raise a bunch of rounds. And then once they get further along, then some of the bigger VCs come in and jack up their valuations. And then when the exit happens, those early investors, you get pretty good returns. And so, we mirror some of the national things happening, but we still have plenty of activity here. And, we also have reasonable valued companies, lower than most, the coastal markets. And so there's still plenty of great opportunities for investors to make good returns. And so that's another benefit of investing in our region and even starting a company in the region. So.
No, that sounds great. It sounds like you've got a cat there somewhere.
Yeah, sorry. I thought he was going to be sleeping, but he came in.
Cats,
this happens all day long. It bothers me when he's not sleeping.
He's coming in to see his dad. He wants to spend some time with you. No, that's great. So, you're going down through it. So we're coming up to the top of the show, Jason. And what's your words of wisdom for those companies out there right now that are trying to get in the market? How is it for them, by the way? Let's say post-Series A. And how is it for pre-Series A? What's the market like?
Well, and this could be, I could speak for Chicago or elsewhere. I mean, so you have to, what I'll say is you have your mission, you know what you want to do. There's going to a lot to be naysayers. There's going to be a lot of external factors that are going to try to bring you down. You have to keep doing the course, keep on building the business. And, if you have obstacles, you modify. I mean, the pivot word is used a lot, right? You change, maybe you go after a new segment, you offer a new product or service. I mean, that happened a lot during the pandemic. People had to change course to survive. And those that survived are probably stronger than they were before because they have a new market segment, new service offering. So you've got to work the network, though. I mean, that's the key. You blindly send something to an investor, it's not going to reach to the top. We do have a submission on our website. A lot of investors do. We look at it, but most of the top deals are going to still come through that network. So the one-on-one connection is still important, whether it's pre-Series A or Series A. Like in our markets, in the Chicago market, we have more later stage investors than early stage. And so we have more early stage now, but we're a big private equity town. So once you're at that level, you're selling your company probably, or at least a majority of it at that point. But it's once you're raising, post Series A, you can also leverage relationships with your existing investors to find more capital. They're going to be there to support you because they have a vested interest. So, but be resourceful. I mean, as an entrepreneur, you have to be resourceful. Be resourceful and find avenues to get in front of investors. And you can do it with a lot of these events. You can still meet people in person if you have time to do that. But it's still best to do one-on-one, I believe, introductions.
No, I agree with you. So how do people get a hold of you? What's the best way to reach you?
So they can find me on LinkedIn. Make sure you spell my last name right, S-O-H-N. People miss that. So Jacobsohn, S-O-H-N. I can put my email here if you want, Gary. Is that fine? Or I'll just say it. It's jason@propellant.vc, PROPELLANT.VC. You can also, there's a submission button on our website. So either of those are good and I will respond. If you do send something on LinkedIn, just tell me where you heard about me so I know the context. Otherwise, you'll get my regular email. It says, hey, let's talk to connect. Either way, I'll send it to you either way, but just put some context behind it so I know where you heard of me.
Thanks, Jason. Thanks for taking time out of your busy schedule.
Yeah.
And as always, I really appreciate seeing you. It's great. And look forward to having you on other shows that we do over time. And to all of you out there, thanks for joining one more time. Runday Presents. And my name is Gary Fowler, and I'm your host. Stay happy, stay safe, and stay healthy. And I'll be back to you again in 2 weeks with another exciting edition. Thanks very much. Thanks, Jason. I appreciate it.
Yeah. Thank you for having me.